Good evening, everyone, and thank you so much for joining it.
Good evening to all of you and welcome to the show. The Dow futures are up 600 points for a change, and you'll be sleeping a peaceful night. So beware the bears. That's what my small analog is. In the sense that let me give you a brief. 34 years in the market, I have never seen more than 2 lakh crore sell off. Normally in this time the market would have been down circuit. And where are you? You're still, your head is above the water. And by the grace of God, crude at 130 or this variable is maybe the most temporary transient which you will see. Now, obviously, when fear is at its highest, greed and fear go hand in hand. I mean, how many of you, if you recall, most of you, if you remember, it was 28th March. There was a negative carry forward of $17 crude. Crude traded minus $17. Are you all aware? Did you see that? Remember?
Yeah,
Okay.
Absolutely.
Now that didn't last for more than 2 days, and here you are now again. So the whole world is tom-tomming the rise in crude and nickel and prices, and it's not that. It is that globally markets and all investments are now driven by large forces, which includes the president of US or the president of Russia. I don't know who all play the markets. So you can see these movements in prior movement sinks in the last half an hour, where people have a premonition what the next day is going to be, and volatility is at its highest. But the silver lining is that despite all the carnage, Indian market investor, whoever the savvy investor, people are saying it's LIC, or I think the retail 11,500 SIP is here to stay. A, B, the retail investor has realized that his his portfolio now, along with gold and silver by default, real estate by the home he owns, fixed income to an extent, and equity. The missing link was equity. For 20 years, I used to tell people buy a stock. They said, forget about stocks, talk about anything else. Now that thing has risen. This SIP is the best instrument I have ever seen in my lifetime, and I think it is arguably going to be there for a long time. So the brave heart, or the back behind this market is the retail investor, and I have no inkling in saying that by the first week of May we should be at new highs. The simple reason being, the FIs have sold like there is no tomorrow, and they've got a lovely exit. Whether they sold at 18 and a half or 16 and a half, or price is not the criteria. The criteria is that so much of stock has got absorbed. Now, and exit is a very easy way, but what about the entry? Is the entry going to be so sweet and so easy? I think I have my doubts. I don't think the entry will come below, before you hit 19,000, and then you'll see a deluge of FI flows for whatever reason. So the rupee has been strong, but in all this, you have this arguably the third world war, which most of us may have seen some of part of what it was in the smaller incidents of skimmerish, but never has anybody seen a war of this incident. And the war has not taken place. It is all the east versus west, propaganda at its highest. I still think Putin is right in what he is doing, because he reclaims Ukraine, which is part and parcel of whatever the erstwhile Soviet was. But let's not get into that. The bottom line remains, this is a bull market correction, and there will be no two ways about it, that for once I'm again repeating, India is in a sweet spot. It's the weakling here is Europe, and that is understandable because of the carnage in which they expect in oil, gas, wheat, commodities. I'm not an expert on all that. All I can see is that fear may have played out at its highest. Now, where do we go from here? Most people are anyway fully invested. So my humble suggestion is, don't get lured by the blue collared, Credit Suisse or the Morgan Stanleys, who change at the dime, at the, जिसको कहते हैं बरसाती मेंढक. I'm sorry to use that word. I don't mean an offense. All I'm saying is, at 18,000 you were talking of 21, and at 16,000 you're talking of 14,000. So your analysis in all is all based on saving your job. I don't have that risk, because I'm a I'm a die-hard Punjabi who speaks his mouth wherever he has to. Maybe overdoes it, but I cannot but make two bones that this market will go to new highs and surprise everyone who's left out. And the left out is obvious. There's a global carnage and there's a global deluge. For whatever reasons, the collateral risk and XYZ and so on. I am of the opinion that we have withheld ourselves very well. I mean, when did you see State Bank, Bank of Baroda not correcting, or an ONGC and a GAIL hitting new highs? So wake up and see the noise around you. It's the PSUs which are showing you that where there was enough value and everyone didn't even recognize them. And I think that the flow of money, as it evens out, as the risk plays out, I think April may turn out to be a real stellar month, given that March year end and other these flows and volatility will be there. So that's the brief introduction. Maybe it's too long. I'll leave it to you.
Before Yash comes in, Sanjeev, I just want you to sort of, for those of us, for people who are listening, just to make sense of your two big statements. One is market is dead, and the second was Nifty will be at a new high before first week of May. Can you please reconcile these two, seemingly contradicting statements?
Yeah, so the markets are dead in the sense that nobody expected the deluge to be so deep, in the sense that maybe the fear is overblown on the side of oil, gas, and the other commodities. Like I said, these things maybe they happen in a sudden way, but they don't last for too long. And now the talk about sanctions and all that may actually be more of rhetoric rather than actual. They all want reconciliation, but it's who goes first. The simple underlining is that globally growth is back with an upswing. Now you will have the Fed even being more compromising than ever he had thought, and people who had said yields at going to hit 2.25, that those yields may not even cross 2 even in the worst of fear. That is because oil and inflation go hand in hand. And I think that there is going to be a sharp fall in, or whatever, the correction in crude, which was overblown, will come back. And global growth, let's not make two bones that nobody's talking of Omicron or COVID now. I mean, look at the flow of people. If you went to the airport, to the mall, you cannot stop 130 crore people waiting. I have been still going to office even in the worst of COVID, but my family members want to move out. They are not interested in all this humbug. So travel, entertain, and it tells you spending powers are back. So howsoever tough it sounds, the sheer weight of money which comes back will pull you back to new indices. So I again reiterate that this whole build up of propaganda and digital media will have you dead before COVID does. But we are going to new
Sanjeev,
highs.
let me just step in here 1 second. I mean, just to sort of, yeah, I would suggest that, calling a real war where so many thousands of people have lost their jobs and, lost their homes, they were not of their, let's not call it propaganda, right? I mean, propaganda may have caused it, but what the pictures that we see, I mean, I don't want to be insensitive at any point. This has happened and we are watching it happen as we speak. Of course,
Yeah,
you know,
I agree. I don't mean to belittle this. I'm very very upset at the cost of life. For us, life means everything. What I meant was that there is a section in Europe which will be hurt. But let me tell you, the GDP of Ukraine is as much as Bihar or UP. So we are taking the enormous negative thoughts of how much of displacement. What
but they
was
have
COVID?
but they have more medical colleges than Bihar and UP shall put together, I
Yeah,
suppose.
that's the anomaly, na. That's the anomaly. Now I know it's painful for the children who have gone and whoever, but there will always be pain points. I mean, who could have thought the second wave of COVID, the damage it will do, and we still came out of it with flying colors. I am not being insensitive. All I'm telling you is that markets are sensitive and markets are forward looking. When they price in the worst, they've already priced in most of the damage. As far as, so I'm not going on the humanitarian. I agree there will
No,
be a lot of.
absolutely, absolutely. I just wanted to sort of make sure. I know you didn't mean it. I just wanted to. I wanted our viewers not to think that this is one of those market conversations where
No, no, no.
yeah,
And by the way, the viewers have anyway become insensitive because they are saying the problem in Ukraine has
yeah.
flown over to the Indian Nifty and Sensex like tomorrow only there is something going to be. We've had 3 lakh Chinese soldiers standing at our border for last 3 years. We've just greeted them with a smile, haven't we? And here 1.5 lakh Russians on the
कोई
border
आया
of
नहीं ना
Ukraine.
सर हमें तो
तो
यही बताया गया है कोई आया नहीं
हाँ, आया कोई नहीं, और अब आपने कह दिया कि अब कल आपको पता लगेगा Taiwan has been hurt by China and the world is going, now you are forward looking on what you can tweet. So as fast as your fingers move, bad news and despair moves with that. That is what markets are all about. Markets don't move on. Markets are very, very insensitive to yours and mine views. That's why the second wave never saw any fall. It went to a new high. And I reiterate that by the month of May, you will be at new highs. That is 19,000. When all this blows over, there will be only one place left to buy, and that will be India. Not that I am a very strong patriot, an Indian by default, and a Punjabi by nature. So I am extremely bullish, and I think this is the last of the unicorns where you got the opportunity to buy. Please, please, I repeat, don't get lured by the talk of unicorns being the best thing alive, and that's why burnt yourself with Paytm and Zomato and Nika, and then blame it on the market. It is nothing but the stupid FIs who invested like whole, and then they lost money, and then they had to sell the other Infosys and the TCS of the world to even that out. That is the harsh reality. The mispricing of the IPO market and the bubble which was created has sucked in everyone, and that despair has been shown on the index.
amazing amazing I think that was a
Amazing.
lovely roundup Yash over to you and of course with a request to everyone else even Gen Z and others who are there and I know people who have a certain amount of insight to provide please feel free to join us and with your questions if you would like over to you Yash.
Sanjeev sir, you mentioned at one point that these foreign brokerages at 18,000 were coming out with reports giving targets of 21,000 and higher on the Nifty. Obviously, at that point, the situation was different, and now we're looking at different factors altogether with crude at 130 and projections of 180. Russia itself warning that if Europe also bans Russian imports, then it might go to 300 or whatever. So basically, the whole situation has turned around. Are you saying that these factors are already in the price in the if you're saying that these concerns are overblown and that from here the markets are just going to go up?
Correct. So I'm not belittling the concerns, but remember, rhetoric is at its highest. I gave you the example of crude going at a negative arbitrage of $17. Why did crude go to minus 17? So these are temporary events which happen. It's called Six Sigma. Nobody anticipated that this will come to this extent. Crude will be written off, but there are enough people who play the market. 10% of world supply and coordinated efforts. I mean, where is now the talk of EV market and the clean green and the whatever the green energy? So take it with a pinch of salt. Extremes happen when extreme rhetoric also happens. On the other hand, when sanity returns, Russia also realizes the amount of losses they are going through. They are ready to sell crude at a $15 at a 15% discount. The Russian Indian ruble is back in trade now. Whether you hear of it is not the concern, because the government may work quietly to help themselves where they can find.
Mm.
Everyone from Russia to India to China will take advantage of this. I mean, that's why these people who are bears are called hawks. They take advantage of illnesses or wars. Okay, and I'm not in one of those camps. Even though rightfully or wrongfully, maybe the market was overstretched at 18 and a half. But now with the earnings, the macro, and the going away of COVID, yes, it tells me that the sweet spot will be the return of money from overseas. In the end, where is this money going? You tell me. You are not going to buy gold. Fixed income is already pricing in the best. Then where will the money go? It will have to return to emerging markets. And I think India has seen a biggest share of market withdrawals. We all talked of this being a liquidity driven rally. I think this is sans liquidity. This is the retail investor. And for once, let's give credit or thump the back of the retail investor who's put his money where his mouth is. So it also tells you that your dependence on foreign flows and foreign smart money is not there. I agree that at 18,000 there was bullish and bearishness, but this is indiscriminate selling, and the cause, again I reiterate, is the mispricing of a lot of the digital or the unicorns or the whatever those that basket of stocks
Mm.
which went to market caps of more than a lakh crore and in 3 months are half the price or whatever. So yeah, let's take it with a pinch of salt. Markets are nobody's friend. It is your duty to do your diligence. I can stick my neck out that in the month of May you will be at new highs, and I reiterate that.
All right. Shriram,
I think
do you want to go next?
Aditya has a question. Aditya, why don't you take your question?
Yeah.
Aditya, you're a speaker already. Why don't you unmute yourself and ask your question? The floor is open to anyone else who would like to, you know, even if you would like to sort of, if you have a contrarian view of, what is being said here, feel free to share it. I think that's the upside of such platforms. Yes.
I think in the meantime that Aditya figures out how to do this, Sanjeev sir, I have another question, and I want to know specifically on autos. Uh, you know, autos have been one of the biggest underperformers in the last year and a half. First, it was the chip shortage uh, which affected supplies. Now it is oil prices which are at all time highs, and now with elections getting over, we know that fuel prices will also go up. So, do you think that this recovery has been delayed by another year? Uh, if so, and has the recent correction uh, m- more than corrected the valuations, or is there scope for further downgrade?
Yeah, very good point. Now, yes, firstly, also let me clarify that people talk of buying the dips or trying to make a portfolio at 18,000. I can tell you maybe a million people would have sworn that if it comes to 16,000, we'll buy whatever, we'll put all our money. And now when the chance has come, they may have already entered or will say that XYZ is saying 14,000. And so remember, there will be no entry points if you keep waiting for putting your money. My idea is start deploying money at all falls, because we remain one of the secluded markets. Of course everyone gets included in this embroglio of war or uncertainty, but India has no direct connection in the sense that IT services or the rupee and XYZ. Now yes, auto is a very sweet spot, but are you aware what is the percentage of people who own cars or two wheelers, or the CV cycle has turned? Tata Motor and Ashok Leyland are seeing the type of sales they've never seen. The order book is strong. The second hand market is doing extremely well. The chip shortage, according to me, may be coming to its fag end. Now, I am not so much of an expert who can tell you what was the percentage of input which had to come from Russia, but I'm sure at least the COVID side things are gone and workforces are back. I would actually think that this could be turning out. Maruti said there was a 2 lakh car waiting which they had. Now, oil, incidentally or historically, if it's not going to remain here and it comes down to that 85, 90 levels, I think this will be more or less done with, because the government itself, because of the elections and all, has not raised prices. They have enough of buffer in the sense of excise, and they're not going to give you such a big shock. Secondly, Indian households in the last 2 years have not gone out. So there is enough savings to withstand some of the faults. Now, always remember, when dark is darkest, that is when you find the real value. And that I can see in some of the two wheelers where rural markets have played spoil sport and so on. But look at the valuations. You cannot get prices for Hero Honda or an Eicher or a Mahindra at the prices there are. They've all indicated their EV cycles are doing well. And if you disintegrate the two, then I think if the surge is going to be through the EV side, then margins will make up for that. And you've had almost 1.5 years of shortage or visible shortage because of demand supply mismatch, which I think the supply chain thing can get rectified maybe in the next 3 months. So I have a overweight on certain stocks. I think Maruti at this prices at new lows is a buy. I'm very, very bullish on Tata Motor and Mahindra. And I think Hero Moto and your Bajaj Autos are going to be very, very sweet spots as their exports picks up.
Aditya, if you want to ask the question, okay, we've got another request.
Yeah, hi. First of all, hi everyone. And Sanjeev sir, it's a great pleasure talking to you. Huge fan.
Yeah, go ahead with your question.
Yeah, thank you. Thank you. Please go ahead with your question.
Yeah, so actually, I wanted to ask your view on infra sector in India. You gave a call on IRB in infra, and it was astonishing. And now you are saying that on GMR infra, which is trading on, I guess, 39 to 40 rupees. So
Yeah,
what will be your views on infra sector?
so infra is in a very sweet spot, and we've seen that capex has come back. Now, please take it to the for last 20 years there has been no capacity which has come on for cement and steel. Okay, that's why these stocks. Did anybody ever tell you that Tata Steel from 300 in 2 years is back to 1500 and it's hitting new highs? ONGC, which was supposed to be the most dead horse, is back to 190. So it tells you that IRB is anyway a domestic play. Fast-tag is a necessity. Now you imagine the traffic which goes from Bombay, Pune every day, or Delhi, Simla. It's astonishing. The companies now, by the way, IRB is a 49% owned FI business. It's got government of Singapore which owns so much. So it's telling you that road infra monetization of assets is here to stay. GMR seems to be Delhi airport is doing 4 times more business than Dubai. And you go to the airport. If I went on a Saturday also in 7 o'clock in the morning, there's a 2.5 hours waiting list on security and so on. So it's a no-brainer. Aerocity is doing brilliantly. It is again, these are slightly high beta plays. So when the market sells off, the FI sell what they own. When it comes back, they run also the same way. So I think L&T, Siemens, ABB, GMR, IRB, these are local plays and they will do very well. Yes, there is going to be a spiral in some of the input costs as far as steel and cement, but you've already seen in cement inordinate sell-off for an Ultratech which has 114 million ton capacity and the stock is hitting 52-week lows. In a month from 8,000, it was in the month of February, it has come down to 50. So the cement prices are up 30 rupees a bag in Tamil Nadu. They are raised by 25 rupees in central India. So these companies are monopolies. They have 58% market share, the top 5 cement players, and they are not going to relinquish. So this is your moment of glory if you can pick up blue chips in infra, in cement, in utilities, in materials like steel, where you can make a lot of money.
Hello, sir. Hello, Sanjiv, sir.
Yes.
Sir, I have one question regarding the banking sector. How do you see the PSBs considering the restructuring done by these public sector banks during the COVID period? It would be a wiseful decision to invest in the PSB compared to the private banks.
But that opportunity came 2 years back now when State Bank was 150. It is still going to cross 550. And I think they are very well capitalized. See, State Bank is the largest lender to all the corporate, which you call the worst sectors: power, steel, infra, and those industries are doing brilliantly. ये एक मिथ है कि स्टेट बैंक में मिसयूज. अगर स्टेट बैंक नहीं होता तो एयरपोर्ट्स नहीं होते, अगर स्टेट बैंक नहीं होता तो पोर्ट्स नहीं होते, अगर स्टेट बैंक नहीं होता तो सड़कें. स्टेट बैंक को हर जगह वहां लोन देना होता है जहां से रिकवरी भी नहीं होती. When Tata Steel was not making money, they had to stand by it because there are cycles in commodities. But right now, Tata Steel is repaying. Most of the steel stocks have become growth stocks. They've repaid loan. Had you ever heard of Jindal Steel and Jindal Power returning money? So I think PSUs are in a very sweet spot. Yes, their leverage on bond yields because they hold big portfolios may be under a little mark to market, but we can live with slightly higher rates as we've come back to a growth economy. If growth is going to be par excellence, then the demand will rise and demand will be accompanied by a high rise in rates. So there is always going to be a little bit of fear of inflation. But for once, I reiterate, in 70 years, what has not happened in the US, India is in a very sweet spot as far as inflation. If it's not for crude, we are still managing our local inflation rather well. So I think that there will be an evening out. And what you're seeing in the US and Europe are cycles which have come after 60, 70 years. And that is bound to happen. So I reiterate, PSUs like Bank of Baroda, State Bank, Can Bank, and my dark horse over there would be Union Bank of India.
I think on that note, I have a little bit to add. I think this was highlighted by Morgan Stanley recently, if I remember right, the report that I read. US has the same amount of inflation as India does at this point of time, and much lesser rates. So I think Sanjeev's point on why foreign investors may have to come back sooner than later. I think there is an excellent data point there which kind of backs Sanjeev's theory. However, Sanjeev, I have a question here. Like, take it as a sort of a devil's advocate kind of a thing. Because there are two parts. One is the infrastructure, because infrastructure has two things. One, for infrastructure stocks to outperform, you need commodity prices to be as benign as they were during the pandemic. And the second thing that did, sort of let them rise over the last couple of years was the hope of a tremendous capex cycle from the government side, right? Capital expenditure by the government on roads, bridges, etc. So a lot of that did play out. I mean, not entirely, not as much as was budgeted, but there was still a significant expense that happened. Going forward, the two things, right? Commodity prices as well as government's ability, because there is no LIC IPO this time. So that's 70,000 crore. That's a 70,000 crore hole in the government's finances. Then you have high inflation, and the RBI will have to act at some point, if not, with higher rates, which you say is you might say that it is absorbable. But there are two things, right? I mean, one is the money supply as well as commodity prices and the government's ability to spend. Are there any doubts there, or at least need to sort of to adjust your estimates on how good that could be?
Yeah, you have given a very good summary of what the circumstances are, and there are no questions about that. But let me also tell you, in many years I have been in the market. When crude is at $30, stocks don't do well. When crude is at $100, stocks reacted because more of the rhetoric of war. Crude as a basket, when it rises, there is a lot of people in the world who make money. Okay, first it was Russia and the Middle East and Germany or whatever. Now that means the wealth effect will grow for us. For us, crude at 120 is not the same shock it did 20 years back. India still has the best reserves. Our GST collections are strong. Like you said, there could be a little bit of teethering on the LIC IPO and the government finances, but for once we seem to be in a relative sweet spot. The government is well managed on a lot of things. Capex, like you said, now if nickel and copper and other commodities see the type of short squeeze, that means inherently there has been no capacity expansion in the last 20 years, which includes the likes of Tata Steel or an Hindalco, and which means that whenever the settling down happens, whether these commodities soften or not, there will be a capex expansion. Part of the budget, part of the expansion may hurt margins, but I think if my whole call is that this boils down to another month or so of uneasiness and then it softens down, then everywhere there will be a deluge of people who want to reinvest in the capex of this, and that will see itself softening of a lot of the prices. For the government to manage, they have always got the ability to raise money through bonds, and even if the borrowing goes little bit above the thing, we've seen that the government has managed their PSU's disinvestment rather well. They have not gone for ETF sell-offs like they previously were, or selling small tranches of Coal India or a sale. They've been able to handle that well, and now with the strategic disinvestment being very very well put off, well done. I think that will only gather steam. So I am of the view that capex, at least on the road monetization or the monetization of what they said, their own assets, will pick up faster, and you could have a lag of maybe a quarter or so, but then you will never get all the perfect scenarios or the prices in your favor if there wasn't this scenario.
A little bit of doubt is what giving us a bargain. I think that's the takeaway. Over to you, Yash. Thanks, Sanjeev.
Yeah. Ashu, you are up next. You had sent your request, so unmute yourself and go ahead and ask your question.
Thank you, Yash. Thank you for giving me this opportunity. Can you hear me?
Yes, we can.
Okay. Hi. I have a question for Sanjiv sir. Thank you, Sanjiv sir, for giving your time to this Twitter Spaces. So actually, my question is, apparently the trend seems like major countries like China and Russia are moving to the path of deglobalization. So do you consider de-dollarization as the path to deglobalization down the road? Because the reason why I'm asking is the crash of ruble was already anticipated by Putin. That's my wild guess, because it's somewhere last year China also had a tech sell-off, and they apparently wanted the foreign funds to move away from China, and I think that Russia is also moving in the same path. So if de-dollarization happens, then will that be a path to de-globalization as well? So this is my first question. Second question I want to put here right away. So again, this is with regards to the commodity cycle. So if China Russia is going to infuse commodity shock, so do you also see that commodity cycle is here for a decade long? If yes, then I think the history tells us that the booming commodity cycle is not good for other sectors. Sir, do you agree to this, sir? That's my question. Thank you.
यार बड़े मुश्किल सवाल पूछे आपने. इतनी डी ग्लोबलाइजेशन, डी डॉलराइजेशन, ये सब तो मैं नहीं बता सकता. कभी आपने सुना था कि बिटकॉइन $1,00,000 हो जाएगा? हाँ, तो आप पहले बताइए. लिव इन द रियल रेल्म. सिंपल चीजें पूछो यार. शेयर बाजार में क्या बढ़ेगा, क्या घटेगा, इतने इकोनॉमिस्ट हम हैं नहीं. दूसरी बात, लेट मी बी ऑनेस्ट.
फर्स्ट ऑफ ऑल संजीव, हम पूछ ले, लेट्स आस्क हिम इफ ही अंडरस्टैंड्स हिंदी.
ये good point. Sorry to make that. देखो, what you have said is correct, but let me tell you, before all this happened, China in fact is the weakest part of the global cycle. Okay, and you've seen that. Whether environment issues, did anybody in his realm ever think that specialty chemical will do the way they did in the last 3 years? So ask yourself the questions yourself. You will get the answers.
What was his name? I forgot. Yash, what was his name? I have something to add to that.
Ashu.
Ashu. Yeah. Sanjiv, if you don't mind, can I come in on the deglobalization?
Please do.
So, because I think, Ashu, we should be very careful about extrapolating what is really happening in the world right now. I don't think what I'm saying is there is any amount of conviction. I'm going to take my answer also with a lot of doubt. But essentially, as it's playing out, what is visible to us is not a larger sort of change in the world dynamics and everything else. I mean, see, for a couple of decades, we've been listening to China and Russia wanting to, have an alternative to dollar as a reserve currency and those kind of things, right? It's not a new thing. And Ashu, please, unmute yourself and jump in at any point if you want to want a sharper answer. So that to that extent, and now let's talk about what we are seeing in Ukraine, right? Especially what Yash mentioned at the start of the spaces, Zelensky's comments that seem to hint that he is not interested in a NATO seat anymore, and that could just mean the first step towards the end of the war and those kind of things. If that actually plays out, if it plays out the way Yash described, then what would that mean? It essentially means that we will go back to the old order where Putin has Russia, Crimea, and the two regions, the two rebel areas which were part of Ukraine, Donetsk and the other one,
Luhan.
whatever it starts with an L, right?
Luhan, yeah.
Luhan, yeah. So which essentially means that we are going back to the same thing with two extra states that are under Russian control, which were anyway in the Russian control earlier. So what Putin would have achieved, and this is possibly, it's seeming like the end game that Putin wanted, which is basically to say, don't come too close to me. If that is the case, and US by not sending in troops or by not getting actively involved in the war in any serious form, has basically stated that because Ukraine is not a NATO country, we are not going in. Putin was very calculated in attacking Ukraine. He has not crossed over into Poland. He has not expanded things. He's not stirred the water beyond he can control. Right. So to that extent, so yes, of course, there are a lot of people who want globalization to temper down a little bit, and everybody. I mean, and that comes from both from the left and the right. People want a little bit of deglobalization for various interests. But I don't think any of that is going to play out in such a hurry because of this war, right? It's a debate that will go on for a few more years. And to answer your question, even if it happens, so then you're talking about an alternative block, right? Where something other than the dollar would be the tradable commodity currency, which is your Russia, which is your China. And we don't clearly know who are the other allies. And even if there are, they're going to be smaller ones. So just in terms of addressable market, right? I mean, where dollar is in circulation, and the countries in which dollar is not in circulation, whatever the other currency is, it's likely to be still a much smaller world than the dollar world. Does that make sense?
Yes, yes, that makes sense. Actually, my question is not for the short term. I was actually asking for the long term, just
Yeah.
to have a view on that.
So if
Yeah.
that,
Actually,
yeah.
yeah,
So
actually,
see,
yes, sir,
long
please.
term, so we didn't know that Bitcoin could be an alternate currency. Now there is a big divided camp which says Bitcoin is here to stay and not stay. So you will have to go and see in what non-fungible tokens are, what that whole stock is, what is blockchain. There has been a lot of change in a sea line of change over a lot of things. I still think the dollar holds good. The US has come back in as to be the strongest economy and come back with a vengeance. I mean, where did you have the likes of $2 trillion market caps for the likes of Microsoft or an Amazon? So I think that the global growth is back, and except for this maybe 2 months hiatus, like we said, we talk on the positive side, which Yash indicated. Zelensky being agreeable to a lot of things, the USSR them saying we don't want to interfere with the we think Ukraine will have its own government. All we want is recognition of Crimea and those two states. So remember, rhetoric is at its worst, which markets tend to price in, and after that, it becomes more of reconciliation. For now, the dollar remains the supreme tradable currency globally. And what you said as far as the ruble, dollar, and so on, you must realize USSR market, the Russian market has not opened, so there is a lot at stake for corporates in Russia itself, and we think that this will be resolved faster than you thought because of this emergency like crisis where nobody wants to end their whole such a large Russia is a very very vast country with enormous resources, and they don't want to put themselves in a spot where globally they will be on the list like China is. Everyone knows that whether it was in Wuhan or the bad culture, but someone from there actually started this whole damn COVID crisis. And Russia, and by the way, China has been at the has seen a lot of severage of contracts and orders, which turns out to be that India is in a very sweet spot as far as PLI, as far as manufacturing, and so on. So let's not take it so far. I continue to think dollar is there. If you are strong enough, then start trading Bitcoin because that seems the alternate. Gold has gone through the roof. So either of those three things stand. I am one of the diehards for the rupee.
Sanjeev, I think when you say Bitcoin, you mean cryptocurrency as a packet, right? I mean, not any one particular coin. Because you're not a active player in that space, I'm assuming it was a generic.
No, I
You
have
meant
not bought
Bitcoin?
Bitcoin at all. I have not traded. My son is 28. He joined me in the market 1 year back. He bought Bitcoin for 4,000 and he sold it at 10,500 within 10 days. So he said, "Have you
Wow.
ever done this?" I said, "No, I have never done this, and I've never made so much money." But I said, "If you keep it to 10, 20,000, it's okay. Don't go beyond that." But
Ah.
you must realize the millennials are in a culture which I've never seen in my lifetime. They are ready to take risk. They realize that staying, they are active, which we were maybe not 30 years back. They are very active. They can take risk. They can read things, and they are interested in instruments. So I am again saying, look at the bullish culture which you are going through, or the transition in India itself. If digital companies or would be digital companies can get 1 lakh crore of market cap, then some of the counters, the dry hard brick cement companies are trading at a zero valuation. So continue to be bullish India, and I'm reiterating 19,000 is coming in May. I think today we've had a long session, so make it the last question. And you are lucky that the market rebounded. Otherwise, last few days you didn't want to talk to anybody.
No. We've been talking through, I think, the last 2-3 weeks. Sanjeev, I would request you to sort of stay on because there are a lot of questions here. However, I want to make one point on, I sort of want to throw a question at you, Sanjeev, linking 2 or 3 answers that you have given. One is the commodity prices. I think Ashu also asked that question. One, combine that with the geopolitics that is at play right now. Europe has learnt the hard way that it can't remain it can't buy gas from Russia and try to fight it, right? I mean, that is something that has been one of the lessons for Europe in the last 2 months. And which I would, a lot of commentators from the West now say that this is a good reason for the entire sort of Western Hemisphere to expedite the rush to green energy, electric vehicles, and reduce the dependence on fossil fuel, which strengthens countries like Russia. With that sort of line getting deeper and more marked on the sand, line on the sand getting more marked in Ukraine. Is that a space, and because you made a statement earlier in one of the answers that kahan sun rahe hum wo sab, right? The things that we heard about new technologies and climate change and those kind of plays, you're not listening, you're not hearing any of that in the noise of the war. So is there how, why don't you share your thoughts on what is the impact of these two things put together?
Yeah, so very good point. Now, see, there were two things which I read yesterday. One, Iran is coming back on stream, okay, which means that will ease the supply of oil to a great degree. Iranians have high sulfur content oil, which is cheaper in price, and India was a very big beneficiary of that because we use that high sulfur, and that is cheaper. Secondly, I think today you read that the Middle East says that settle Yemen, and we will also flood the market with oil. Now, all this is diplomatic. There will be a lot of resolutions. Like you yourself said, Germany is in no way going to tie off with Nord Stream for gas because they are very, very dependent. Three, this, like I said, today there was talk that Indonesia is the largest producer of nickel, or one of those countries, and they are going to step up production and so on. So maybe these are, like I said, astronomical one-off times, and they get adjusted also equally fast. You must realize commodity cycles like aluminium or copper smelters are built over 30 years. They don't come up overnight. And when the demand supply mismatch happen, it creates a lot of issues, and which you've seen as far as semiconductors and not being able to even Apple is giving you phones which are not top of the line, or so I am of the view that this all streamlines in the next 2 months, and then the return. Remember, whenever there is destruction, there's a saying, the markets bottom out the day the first bomb drops, and we've already seen enough bomb drop. So I think that once there's a reconciliatory tone, the recovery will be aided by a fall or evening out of commodities, and the return of spending on the recovery of a lot of things, whether it's infrastructure in Ukraine or the countries hit, and then the capacity build up. So all in all, it means that I am portraying that by end of April we will be through all this to and fro of rhetoric, and there will be reconciliation. That's my first stance which I'm taking, and upon that the correction in the other things which have gone to absurd levels will come back to reality.
Obviously, and I'll just add into Sanjeev sir's point about the Iran resolution. Also, there are talks of US approving Venezuela to also start exporting oil. Obviously, we have a trade channel with Iran, and they even allow us to purchase oil from Iran in Indian rupees. So that is also going to be another positive. And like Sanjeev sir mentioned, that everything might settle down, and we'll start seeing these reopening related stocks, the way that we saw them move today, could be another indication that could be one pocket to watch out for once the dust settles, obviously. But uh, Sanjeev said there's one sector that we get questions for a lot of time from people, that insurance. So many people are bullish, highly underpenetrated, huge growth potential, but somehow we haven't seen that pass through in price action. What explains this underperformance, and do you see this trend reversing anytime soon? Is the worst in terms of the sell off over, and is it a good entry level for someone to buy?
Yeah, very good point and very good observation, because insurance stocks in the last 3 months have been the biggest underperformers for whatever reason, the forthcoming LICI. But I think that insurance stocks, particularly the well capitalized and the ones which I'm referring to, the HDFC, ICICI, SBL, they have a huge potential. Look at the penetration of insurance in a country like ours. Now gross value addition or the premiums have been a hit. First it was COVID, now this war related. But I think now if life gets back into normalcy, then insurance seems to be in a very sweet spot. Plus, with rise in bond yields, I think they'll make up for other income to be a component. I would wholeheartedly tell people that if you are looking for the next 5-10 years as an investment, insurance in India seems to be a no-brainer, and particularly the private wealth insurers. The ones like the ones which are well capitalized, like HDFC, SBI, and ICICI. Some of the New Indias and the GIC are seasonal plays, but they are also part and parcel of that. Now, all of them, like you said, went through a cycle where they went to new highs, but have retreated very sharply from there. I continue to think that they are a very, very good long-term story.
Sir, if we can take one more question. Saurabh Khanna has been given the speaker access for quite a while, but never got to ask the question. Saurabh, go ahead and unmute yourself and you can ask the question now.
Good evening, sir. I know it's now last 5 minutes. My question is very simple, not tough like Ashu. Sir, when will the two stocks which are the most talked about, Yes Bank and ITC, will see any positive movement? And my simple second question is, where do we see Nifty or Sensex in December 2022? Thank you.
नहीं, दिसंबर 2022 तो बहुत दूर है. हम तो आपको मई में ही बोल रहे हैं न्यू हाई आ जाएगा. उसका सिंपल कारण है कि we are saying there will be a reconciliation in all this and the return of money. The money will come back. Don't worry about that. December is very far. We'll wait for how the corporate earnings, how markets play to commodity cycles. But I would still say that this year will end on a positive note. The other question you asked is Yes Bank and ITC. ITC seems to be in a very sweet spot. Their businesses, aside from tobacco, are seeing a lot of strength. They are planning their way through. If the demerger of the tobacco business takes place, it will be unlocking of value. But like you said, it has been however, if you owned ITC in this whole chaos, it has still been able to hold its head above the water. So I continue to think ITC is a very good longer term play. Now, where did you expect lever to hit 52-week lows and so on? It is some of the overvaluation which you had given some of the large brand FMCG players that is getting evening out, and that has made ITC shine. So I continue to be overweight ITC. Yes Bank will take time, though the bank is starting to function in a very, very good way. But you must realize Yes Bank now has an equity of 40,000 crores. So the market cap is fairly large, and it will take time for return on equity to come, even though the worst may be behind. So it is a very good longer term story, which means the next 3-5 years, as we see credit expand and we see their banking channel open up with a lot of the problems of the past being put behind, it could be a relatively good bank to do. But don't expect overnight doubling or tripling as is expected, because the base has become very big. That's what I'm trying to say.
Awesome. Shriram, do you want to go next?
Hello. Yeah, no, I'm good. I think, if we have any viewer questions, let's take that. So that, it's of maximum value to the listeners here. I don't want to eat up the time that Sanjiv has given us, the extra time that he's given us. Anyone else? If you have a question, please jump in.
Yeah. I'll just quickly give access to Adarsh. I think, sir, if that could be just the last question and then we'll wrap up. We understand we've taken up almost an hour of your time. So,
but he's definitely excited, isn't it? I mean, like you said, it's a relief to be talking about a bullish outlook after what the last 2-3 months have been.
Absolutely. Adarsh, go ahead. If you have any question, you can unmute yourself.
So my question is, Bhasin sir, that which sectors he is looking forward for next 6 months, and what is the market outlook he is looking for, that positive wise or consolidation or negative wise?
On the outlook, I think he's already answered.
He's already answered that. Yeah.
I think
take another one.
On the outlook, he said that he expects the dust to settle by April and by May to hit new all-time high. And such sectors, you can go ahead and answer.
Sorry, join delay. Sorry for that.
PSU banks, I think that was his this thing, and of course blue chip stocks like HUL, ITC, Ultratech, stocks that have recently hit 52-week lows, despite being big large players in their sector. Of course, he's very bullish on
Autos as well. Maruti,
autos.
Tata Motors, M&M.
No,
Yeah,
but I would still say the top sector for this year will be reality. You cannot imagine the sales DLF and Godrej property will see. And now the prices are in your favor. The DLF has got nothing spare now in their commercial real estate, and commercial real estate will pick up like how people want to get back to offices. And obviously, if DLF will do well and Godrej, then Ultratech becomes a corollary to that. Metals may have seen the best of the rally with energy, but energy is here to stay. And if this crisis remains for another month, the ONGCs and the Reliances of the world will make money. But IT is in a sweet spot because of weakness in rupee. However, I think banks will come back very, very strongly because, Axis and ICICI have been well capitalized. They're getting more market share. PSU banks are in a sweet spot. So relatively, this whole scenario, autos are giving you a good entry point, but my top picks here would be real estate. I think real estate will be a very, very sweet spot, at least in this 2022.
but mostly commercial real estate, right, Sanjeev? Because the residential real estate, I don't think the outlook has cleared up as much as one would like to see.
But Shriram, what has happened is people are looking for more space. If you came to Gurgaon where I stay, the prices have almost moved up 50% in the last 1.5 years. Delhi people realize they need more space, so they are selling there and buying here. When I go to Bombay, I have a lot of my people who follow me. They say, "Sir, हम two BHK से 3 में जाने को है." And Godrej sold out all its new launch, which was closer to BKC or whatever, not BKC, sorry, Andheri East, and they said that new launches are getting sold out. So remember, when fixed assets will do well, when there is uncertainty, and gold hitting new highs means emotional value will get converted into real estate. So DLF, Godrej are giving you very good entry points. I can see these stocks being huge outperformers in 2022. We can review this on Diwali of 2022, God willing.
Of course, this that's true even in the rental market in Bombay. Journalists will talk about what they know, and 2 BHKs in my area are like dime a dozen. But 3 BHK rents have actually gone up even during the pandemic because, like you said, people wanted uh, additional space. And I think that's a great note to end this conversation on, I guess, Yash. And I hope people at 8:30 in the night are not just worrying about their money, and they're looking at a more fulfilling life, doing a lot of other things. If anybody has anything to share on that, I'm happy to hear. But we can let Sanjeev go because and if you want to say, Sanjeev, I mean, for a lighter discussion, maybe please feel free.
No, it's been a pleasure. Thank you all for inviting me, and hope I have added value to it. Now, I told you I'm a by-heart Punjabi and a die-hard bull and a patriotic Indian, so I continue to be bullish on ourselves. And please don't underestimate the power of retail investors. In my lifetime, I have not seen the type of feedback I get, or the people who follow and the people who want to part. And that is the silver lining. Whether you make money in the next month or the month beyond, these will be one-offs in your lifetime, which you will fall and realize that given your age, dynamics and experience, that these were golden opportunities. Remember, these don't happen too often in a lifetime. So take it with a pinch of salt, put your spare money, and you will be laughing your way to the bank, hopefully. Anyway, we have given you reason to give you calls on bullishness or for whatever reason, but I am maybe one of the sole people who holds his head high that we are headed to new highs, and God willing, I'll be proven correct. So it was great being here, and wish you all happy, healthy, and wealthy times in the near future. Thank you.
Thank you, Sanjeev.
Thank you
Thanks
so
a
much,
lot.
Sanjeev, sir. That was a really engaging session. Lots of learnings and your take, obviously, on markets and several individual sectors and more. Guys, for all those who joined late, this will be our first pinned post on our handle. So we highly recommend you go and listen in from the beginning in case you joined late. And we do these Twitter spaces every Wednesday. So if you are new, do not forget to follow us on Twitter and sign up to our Daily Rep newsletter as well to stay up to date with the markets. This is your host, Yash Upadhyay, signing off.